Hello traders, this is Mac Billion. Today is December 30, 2015, and let's talk about the market. We're getting very close to the end of the year, so probably this is my last video for this year. So as you can see here in the spider, which is the ATF for the S&P, we trade inside 212 and 203 for whole year. And we're gonna finish between those two Fibonacci support and resistance. So it was not a good year for swing trades. We finished green and McBillion, but it was hard. It was really hard because there was not trend. It was moving sideways. You went through a position in 2 or 3 days. It was changing directions. It was hard. It was hard for everybody, but we managed to finish green, and that's what it counts when you're building an account little by little and using risk management. So as you can see right here, we're back between 212, 203. There's a short-term resistance that we break out yesterday, but today we didn't confirm the breakout, and there's still no volume. Sure, because it's the end of the year. We finished about the 5 simple moving average, about the 20, and about the 50, which is a good. Now, there's a long-term right here support. There's a short-term resistance. If you break out, this is the major resistance, 212. You can see here many times we break out, but it didn't last even for a few days until it break down. You break out here, break down, break out here, break down, and then the last time we tried, that was back in November, the beginning of November. We tried to go there to 212, but it didn't make it and break down. So as you can see here, we're making lower lows, lower highs and lower lows. So right here you see the trend support and trend resistance, and that's what we're gonna see the first days in January. If you're gonna break out here and test the resistance, or if you're gonna break down because market earnings expectations start low, especially with a COA. That's gonna be in January 6th when everybody start to report. If the reports start weak, we're gonna break down here, and we probably gonna have a letdown probably to 182 again. If not, we're gonna break out 212, and we're gonna enter long in many in my watch list. So that's my take for this coming year. For January, let's see what happens. I think we're gonna go up from here, but let's see. Especially this coming year is presidential year. Now let's talk about Apple. Apple right here is inside this symmetrical triangle wedge. You see the support right here. You see the resistance. Right now, when DMI doesn't look bullish, it looks bearish. It looks like it's gonna break down. However, Apple is Apple, and the bulls might come up and break out right here. So this is the resistance you need to be watching for January. It's very easy to put this resistance on your charts. If you break out this resistance, what are you gonna do? You're gonna go long. If you break down, then you have 103 support and then 94. So let's see what happened for Apple at the end of the year or the beginning of January. Amazon, as you can see here, making higher highs, higher highs, higher highs. It break out yesterday this major resistance 682, but it didn't confirm yet. But it finished about the 682, which is bullish. We got a crossover on DMI, and ADX start trending up, so we might start going up to 734. So Amazon is bullish to me and can have another great year, 2016. Baba. Okay, the first thing I have to tell you about Baba, that is making lower highs. This is a lower high, lower high, lower high. So you can tell right there it's in a lower high, but it hasn't give up. So if it doesn't break out here 85, it can get in real trouble and have another let down. We have a let down here from 105 to 78. We have a let down here from 94 to 58. So we can have an 84 let down from 84 to probably 40s, or who knows. But right here, bulls have to get up here and break out, because if they break down, we can have another trend like this or like this. So let's see what happens. I'm thinking that it's gonna go up based on here, on the way that it was acting, price was acting, trying to break out 85. But we need to see. We have a long position for the beginning of the year. We have calls, January calls. They have 16-day expiration. But we need to see what happens. If we break down the 50 simple moving average, this thing can get ugly. Now let's talk about another one. Let's talk about CAT. I put CAT here in my watch list for the beginning of the year because it has a nice pattern right here. If you break out this pattern, this resistance, I'm gonna go long. If you break down below 64, what are you gonna do? Short. But I'm thinking because it has been going down whole year that this thing is gonna break out and do a little rally to 81. But we will only enter if there is a breakout. Breakout or break down. However, we're gonna trade both sides and make money. That's our target, to make money. Facebook. I keep liking Facebook. You see right here, consolidation up. You see right here, consolidation a little down, up. Consolidation a little down, boom, it's gonna go up, I think. I think 126 to 130 is the next target for the next let up. I think it's just consolidating here, and the enter will be 108. You see, he break out right here after earnings, and he tries right there 11, 12, 11, 11, but he couldn't confirm, but it's still there, moving sideways, and you can see the support, the trend support, which is also the 50 simple moving average. So put it on your charts. Facebook is bullish. You can get the stock. I think it's a good investment for the 2016. Now let's talk about gold. I have to include gold because everybody's talking about gold. Everybody thinks that the Fed is increasing rates, so it might take off this 2016. You can see here making lower highs, lower highs, lower highs, lower highs. It's broken. It's broken as hell. So don't go long here until you see a breakout here, 110. 110. If it goes right here and break out the Fibonacci and the strength resistance, which is 110, you go long. But not now. I wouldn't go long right here because you just can go here and put another small let down probably to 97, then another up a little bit, and then to 80s. So who knows? Let's see what happens. 110 is the number. That's it. Goldman Sachs. Look at this pattern. If you break out this resistance, you go long. And you can see here, what do you see here? I'm going to zoom this out. Head and shoulder. You can see the head and shoulder, the neck, everything. You see the head, the two shoulders. If you break down this Fibonacci 167, it's going to get ugly. But this, you have this resistance, and the bulls have an opportunity to break out right here and kill this pattern, this head and shoulder pattern. So it's on my watch list. So you should have this one in your watch list. Goldman Sachs. Netflix. Netflix is another strong stock that you should put it on your watch list. You know, it's consolidating here and it's bouncing at the 50 simple moving average. So you have this trend resistance that you have in your chart. If you break out this trend resistance, we're going to have another let up. If not, I would like to buy right here in this trend resistance and use the same trend resistance as your stop loss. So for example, if you go right here and enter long, but it goes up a little bit and then down, you have to get out. So the same here. If it goes here and bounce, and for some reason you see there's weakness and start to going down, you have to get out and use this trend resistance as your stop loss. So easy trade right there is on my watch list for the beginning of the year. Let's talk about oil. OAS. This is Oasis Petroleum. It's only $6. So you can buy this one using the stock, or you can use the auctions, however. Now, broken as hell. It break down the $8. You see here, it was support. So if it takes, the bulls get up and take the $8, that's what I'm gonna start thinking about going long in oil, and this one in this stock, the Oasis. So keep it on your watch list. Let me zoom this out. If it goes here and take the $8 up, and you use the $8 off your stop loss. Easy trade. Now the last one, I have to put Tesla. A lot of consolidation. This is a very, very risky stock to trade. So be careful with this one using auctions. Trade small, no more than 2% of your account. That's that's the golden rule of trading. If you don't use this rule, believe me that 2016 is gonna be bad for you. Especially if you trade one of these like Tesla, Netflix, Amazon. They can make you rich, but if you don't use the 2% risk management golden rule, it's gonna destroy your account. So if you break out this resistance, what are you gonna do? You're gonna go long. You can see the resistance there. You can see here today, you take out the 238 resistance. It was resistant for almost 3 months. So we break out, we finish below almost at 238. So let's see if tomorrow we can go there and test this, because you can easily go and test this resistance and start going down. But let's see. Use this resistance, I think. And DMI is bullish, but it's flat. ADS is flat, so there's no strong bull right there. So you can also place a line. Let me place this line right here for support. Very easy. So there you have your support and you have your resistance. So trade that. That's what you have to trade. Trade breakouts, breakdowns, bounds, fails. That's what you have to trade. So to do that, you have to have many stocks on your watch list, and look for patterns and just watch very patiently with discipline, using risk management. And I promise 2016 is gonna be good for you. Traders, I have a nice promotion on my website. You can get in lifetime, only one-time payment, a very small money. It's only $299. Check it out, because 2016 is gonna be just great. So this is everything for today. Trade on.